Welcome back. You're watching us here on Halftime Report. Let's pull up the intraday chart of Paras Defence and Space Tech. The stock is at the low point of trade. This, as a company, has brought in a weakish first quarter numbers. Yes, the revenues grew about 18%, but that was much below the company's guided band of 30 to 40% for the entire year. And the margins too have been at a 5-quarter low. As a result of which, we've seen the net profit for the company decline by about 15% for this quarter. Amit Mahajan, who's the Director Technicals and R&D, joins in now. Amit, thank you so much for joining in. Now that you've grown about 18% in the first quarter, the last time I remember we spoke, you had given a conservative guidance of 30 to 40% for this year. Would you want to revise that, or are you confident of achieving that? And if so, what kind of margins would you end this year with?
Good afternoon, and thank you for having me over. I have always been maintaining that, we are a company which cannot be judged on the basis of quarterly results. So I am not going to revise my guidance. It is between conservatively 30 to 40%. And this quarter is no way an indicator as to how we're going to perform in the coming year. Because we have a very, very strong order book, and our order book is improving. Our opportunities, that is, we call it as funnel, that is going up, and funnel is multifold. It was 2x earlier, and now it is almost 3x or more than 3x. So there is nothing to look down upon.
And margins, if at all?
Margins we will sustain. We will sustain. Yes, the quarter one shows a slight reduction in margins, but that's probably because our employee benefit costs have gone up from here in the last few months, because we have been investing into our own manpower. That's going to fuel our growth in the future.
Okay, so Amit, when you say that margins will sustain, what is the range that you're guiding the street? Because it's 22% this quarter. Your peak margins were 27.5% in the past couple of quarters. So what is the range that we can expect in the next couple?
I'm talking about the year closure. And when I'm talking about year closure, we should be able to sustain a margin of 28 to 30%, or maybe slightly better than that. As far as PAT is concerned, also we would be in excess of 17% what we did last year. So I have no issues in blocking that on a yearly basis. On quarterly basis, yes, it would look differently. Q2 will look different. Q1 will look different. Q3, Q4 will look different. But at the end of the year, we're going to be doing much better than last year.
Okay. Amit, just hold that thought. We just need to cut across to a press conference. Maruti is addressing the media, so let's just cut across. Yes, let's get back to our conversation with Paras Defence. Amit Mahajan is still with us. Amit, if you could just start, continue by now telling us where your order book stands currently, and how much would you probably be bidding for in the next 2 to 3 quarters?
So the order book currently stands in excess of 650 crores. And the current financial year, we would be looking at the same, like I told you, the growth will be around 30 to 40%. We have opportunities in front of us in excess of 2,000 crores. So that's something which is increasing exponentially from year on year.
All right. So 650 crore order book grows at around 30 to 40% this year, with an increasing total addressable market as well. One of those is, rather two of those. One of them is drones, and the other one is exports. Can you throw some more light on that? I've seen you win a couple of drone orders over the last few months. What proportion of your order books is drone right now, and how much will that translate into your overall revenue, say 2 to 3 years from now? And similar is the case for exports as well. How much do exports account for right now, and how much will they be, say, 2 to 3 years from now?
Yes, the drones have started ticking. The clock with the drones has started ticking. But still, if you would want me to put in absolute figures, it is still less than 5% of our order book. So drone has yet to make positive influence, which is a good sign. Whatever comes in the drone area is going to only add up to what we are doing right now. The standalone order book is in excess of 610 crores or something like that. So you can imagine that the good days are yet to come. When it comes to a strong order book, and when it comes to opportunities also that I'm telling you about 2,000 plus crores, these are all standalone opportunities. I'm not even factoring the drones and the anti-drone markets that we are catering to. Those are all going to be bonus to what we are trying to do. Said that, I would also want to make sure that, our growth is quite sustainable, and our exports, currently we do not have much dependencies on export, I would rather say, because the domestic opportunities are keeping us very, very busy. The exports would come as a natural growth or progression in a year or two, maybe.
And your target of 100 crore revenue coming in from drones and 25% of your order book coming in from drones by FY25, does that still stand?
We are very truly on the way for that, because you can see today we have an order book of 40 plus crores already, and the orders are going to flow in the next few days or months. So even this year, by the end of the year, we look at maybe a good revenue, much more than what we have projected, and next year looks even better. So yes, we are well truly on the way.
Okay, just a quick last word, Amit, on the export market. You said that you're currently not concentrating on the export market. It's not a key focus for you all. But in any case, would we see you all bidding for any orders in FY24? What might the potential revenue inflow be?
So we will be bidding for, our current focus is, like I'm telling you, it's domestic market.
Yes.
Notwithstanding that, there are certain opportunities, certain joint ventures that we are doing with Israeli companies or other companies. Those companies will generate export business for us automatically, and that will become a very big bonus factor for us. So those will come in a year or two.
All right, Amit, thank you so much for joining in and giving us your details for this year. Unfazed by the weakness that we saw in the first quarter, still holds on to the 30-40% guidance for this year, with 28 to 30% margins as well, holds on to higher proportion of revenues coming in from drones as well over the next couple of years. With that, we will take a short break, come back. On the other side, we'll get chatting with some more managements and also discuss the markets as well.